join with me in giving a big startup grind welcome to Mike Katchen. Thank you for being here. So they have an event at Wealthsimple tonight where Dan DeBow, who was the founder of Ripple, is doing a fireside chat at their office, and Mike is here with us. So
you can imagine things have been a little busy these days, and we had a small scheduling error tonight. So Dan's still having fun in our office, and I'm thrilled to be here. So thanks for having me.
So before the Y Combinator experience, how did you get started as an entrepreneur? Where did you get a spark? I mean, you're what, 27 years old. This is your second or third startup, right? And so why did you put yourself up against startups?
Yeah, it's an interesting question. I mean, I grew up as kind of a scrappy entrepreneur socially in school, starting clubs and things like that, but never starting businesses. I was not the guy that started a paper route in school. And I'd always wanted to be an entrepreneur. And I think as I reflect, I got really lucky along the way. I could have ended up very easily being the entrepreneur that kind of always wanted to start something, but never ended up kind of taking that leap. And when I graduated school, I started my career at a consulting firm, McKinsey & Company, which was a really great consulting firm. I learned a ton, and always wanted to start a business. And in my kind of last year at the firm, when I was thinking about what I wanted to do next, I spoke with about 2 or 3 friends about starting something, ran through a whole bunch of different ideas, and they all bailed on me. Within the last 2 months of me leaving the firm, I was really, revved up to start something, and all my friends bailed on me, and I got cold feet and decided, I wasn't going to do that. And I ended up selling out and doing private equity interviews, and I got a job with one of the top private equity companies in the country here in Canada.
What firm?
I don't know if I should say. It's a company called Birch Hill.
Okay.
It's one of the top kind of interior firms.
It's only on video, don't worry.
Yeah, exactly.
Can't say anything.
It's okay. Still close with some of those guys. Maybe not after this. But and then my very last day at McKinsey, I got a phone call from one of my early colleagues at the firm who said, "Mike, we just got into Y Combinator. You got to come be a part of this thing." And this is obviously strike a lightning, exactly what I wanted to be doing. And I got really lucky that happened. So I reneged on my offer, which is not something I encourage anybody to ever do. And hopped on a plane and moved to San Francisco. And we built a company down there, which was called 1,000 Memories. We raised about $3 million from Greylock, built a wonderful team, a couple different products, and ultimately sold the business about 3 years ago to Ancestry.com, which probably most of you know Ancestry. It's the largest family history company in the world, and probably one of the oldest tech companies around. They've been around for 30 years. We were first a magazine and then evolved into a website over time.
So wait, so you were now part of the application team for the Y Combinator thing?
No.
That is incredible. That's pretty cool.
I got really lucky. So it was a phone call from a friend who said, "Really, come join us, be part of this team."
And how many people went?
So 3.
3 of you.
Yeah, there were 3 people on the team, we spent the next 2.5 years building, 3 years building this company.
So let's go to the first day in Y Combinator. You're walking in, like getting out of the car.
I joined just after Y Combinator.
Oh, okay.
Yeah,
okay.
I got the offer to come as they got in, and
okay.
I joined just after the program.
Okay, so you didn't have any of that
No.
program experience.
So I did disappoint everybody.
Okay. Okay.
So were you part of the transaction? Part of the those?
No, so I didn't have any part to do with all the exciting stuff in
okay.
Memories. So they did Y Combinator, raised the money, and then I got the invitation to come join the team.
Okay.
Yeah, it just became ultimately less interesting. You guys can all leave.
No. There's probably some things that have happened since.
So then the deal gets done. It's sold to Ancestry.
Yeah.
And then those are any of those guys still part of this team? Or?
Yeah. So we sold the company and spent a year at Ancestry in San Francisco building all sorts of new products for them. And then. It's funny. I made the same mistake again. I've been working on Wealthsimple on the side once the deal was done for quite some time. Knew this was something I was really passionate about starting, and walked into Ancestry into kind of the head of products office and quit. Said, I'm going to move back to Canada. I'm going to get this new company I'm really excited about off the ground. And he said, you know what? Don't quit. go up to Canada and run Ancestry's Canadian business. It's a team of 10. We do, tens of millions of dollars of revenue. Really great opportunity. You're 24 years old at the time. Why don't you go do this thing? And I said, that sounds kind of interesting. So I took the job. And again, within like 2 weeks of doing that, realized it was a very big mistake and quit to start Wealthsimple. And the very first thing that I did is I called a couple of our partners from 1,000 Memories and somehow convinced these American guys to move up to Canada to get this off the ground. Yeah.
So Wealthsimple was founded how long ago?
So officially, it's been since last February, full time.
Okay, but you were working on it for a couple of years before that.
Yeah. I've been investing myself since I was 12 years old. I was like kind of a weird kid that won my first stock picking contest at 12, and was always the guy that was helping friends kind of set up their own portfolios and be a little thoughtful about their investment management over time. When we sold the company, there was a group of 10 people that came into a little bit of money for their first time in their lives and were looking for a little help to get started. And the very first version of Wealthsimple was an Excel model that I put together that was simply, a set of questions that helped you figure out the type of investment profile that you had and built you a profile and a portfolio that went along with that. It was designed to be a self-help tool. So build your own portfolio. Don't ever hire an investment manager. You don't need them. And this is how to save yourself a lot of money and kind of stress over time as an investor. And the feedback I got from that was, this is great, but why don't you just do it for me, Mike? And that was actually the first kernel of where Wealthsimple came from. And over the following kind of 6 months to a year is when some of the guys in the States, like Wealthfront and Betterment, started to get a lot of traction and validated that there was something to this concept.
Okay, so who has questions? You put up your hand if you got a question. We've got one here. So I have a whole bunch more, but go ahead, Mark. What do you got?
Here's the $64,000 question that I've always been curious about when it comes to entrepreneurs who raise a lot of venture capital. Like, after you sign the check, I'm sure you've been negotiating for months, but after you sign the check, then what? Like, what do you do with all? Now you got a big check in the bank.
If you've got the answer, that'd be great. I think.
So are we talking about the seed round was 1.6, right?
1.9.
1.9.
No.
Are you talking about that check, or are you talking about
The big check.
this $30 million deal?
To be totally frank, right? This is a very new chapter for me. I've never been through this experience before. I feel extremely fortunate. I mean, the company is 7 months old. It's very bizarre to be in the position we're in, with the kind of resources and capital behind kind of what we're doing. And so we have a lot of ideas of how we want to spend it. I mean, we're growing really fast. We really need to build a team. And so that's something we're really going to be focused on is, both software engineering, because there's just a tremendous amount of opportunity to reshape technology in financial services. Having spent a long time in this, not a long time in this space, both as a consultant back at McKinsey and now, in this space as an entrepreneur, I can't tell you if you want to start a fintech company, please do it. And Toronto is a great place to do it. There's a ton of opportunity. So certainly on the tech team, our advisory team, we spend a lot of time with clients, giving them financial support and advice. So a lot on that front. And the cool thing about this is it enables all sorts of opportunities. The really hard part is figuring out which bets to place. So we could place 10 bets, we could place a couple big ones, and we're spending a lot of time right now figuring out which are the few strategic bets that we really want to throw the weight of the company behind. And that's fun, but it's super daunting. You can imagine.
Can't imagine.
Yeah.
So can you take us back into that initial 1.9 and give us a little, the group of seed investors that you've attracted are kind of like the tier one angels of this. Did you go to U of T? Where did it all start? Like, how did that coalesce?
Yeah,
So you didn't go to U, right? He didn't go to U.
No, I didn't go to UT. I went to business school Ivy, which was a big mistake. I loved Ivy; it was great. But I wish I had gone to software engineer. I think computer science is a wonderful program these days, in particular. We did not go originally to kind of the usual suspects when we were looking to raise our round. I think most people are very familiar with some of the big kind of angels in the city, like Dan DeVoe and David Ossip, who are part of our cohort of investors. But we actually took the opposite track and went to people that have been very successful in financial services. And I think this is a mistake that a lot of entrepreneurs make when they go out to raise money, is they go directly to the well-known angels who are seeing 20 pitches a week, 50 emails come across their desk, they don't have time to talk to everybody unless it's coming through a warm introduction from someone they know. They're really not going to pay attention to it. Whereas there's a ton of people that have been very successful out there that know their industries inside and out, can kind of see changes that are coming. In our case, Joe Canavan was one of our lead investors. He used to run Asante, which is a $50 billion wealth management company in this country, one of the largest wealth management companies in this country. And he sees the writing on the wall. He was part of the kind of mutual fund evolution back in the 80s in Canada, and sees this as the next major transformation coming in financial services, and was super excited about what we were building and really willing to put in a check. And folks like him, while they're very active as investors in all sorts of companies, see much fewer deals than kind of your traditional.
Did somebody introduce you to Joe, or did you just go cold?
Happenstance. I was looking to hire our first portfolio manager, which we needed for the regulatory application, and the gentleman I met with, which was just LinkedIn trawling who CFAs were in my network, I could maybe convinced to go out for coffee with me, said, I'm not your guy, but I got someone you got to meet, and made that introduction for us. And once he was on board, it was then a question of, we've got a really amazing angel that's leading the round. How do we fill this in? And we're really lucky that we pulled together a group of about 15 angel investors in our first round, and that really combined both technology and finance expertise, which is something we were very deliberate about building.
Did FedDev get involved?
Did, and if anybody's looking for FedDev support, Brian Hendry is actually here tonight, helped us out with that. It's a really great resource and can kind of guide you through the process. But
So Ryan, you're a consultant, and you kind of...
Yeah, outside consultation work program.
Okay.
It's been a great program for a lot of companies. It takes a while to get through it, but they provide all of funding for every $2 of
Private money. Yeah, so that's roughly how this deal looks out.
Well, actually, it's amazing. They write a really big check. So in addition to the 1.9, we also raised a bunch of government money, 775 from FedDev, a whole bunch from IRAP. So it was a much bigger round if you added kind of all the government funding on top of that too.
So it was...
Sorry, 1.9 of private money.
Yeah.
Then the FedDev money. Then there was also
IRAP.
IRAP.
Some of you might be familiar with IRAP.
Yeah.
It's a great program.
But that comes in sort of after you've spent the money.
Yeah.
Right. That's awesome. Okay. So did everybody catch that who's trying to finance a company? That's pretty cool.
Yeah, guys, check out government programs. Yeah. They're really, really useful, especially early days. IRAP, FedDev, Shred are kind of the usual suspects. There's also the Ontario Media Digital Credit or something like that. Yeah. That's really worth checking out.
Go ahead.
So when you're raising your seed round, how do you you've got all these different investors coming from all the different places. How do you sort of decide, okay, now, how do you get sort of the money all at once? Or how do you sort of decide when to end your seed round? To say, okay, we've collected enough money, and now let's close this round.
So, it's funny, we actually had originally planned to raise $500,000, but we're lucky that there was a lot of inbound interest after we kind of secured our first investor that we ended up taking more. I think I'm not sure I 100% would give everybody the same advice, but the general wisdom is if people are throwing money at you on the terms you want, you should take as much as you can.
And was it a convertible note deal or a safe deal?
We did a price deal. Simplicity, you can do it any structure you want. Yeah. Things are generally getting much simpler. If you guys are probably all familiar with Paul Graham and Y Combinator. He writes about this all the time. They put together the kind of safe kind of term sheet for a seed round that's really worth using. And many more folks here are kind of adopting that sort of approach too. But to answer your question, this is a really big problem for a lot of people that are trying to raise money because fundraising can be a very distracting process. It can be all-consuming. It can take forever. Unless there's a deadline, it'll drag on. So the best thing to do, in my experience, is once you have your lead, focus entirely on getting your lead up front. Don't go wide. Really focus on getting a lead investor. Set a deadline. And once you have them, it's 3 weeks out. And so once you have that, it's a race to kind of close the round with all the people that you want. And once you have it, you're able to drive the urgency. It's, hey, we've raised some money. We're closing the round in 2 weeks. If you want to chat, we're working on this great idea, but it's got to be now because we're closing.
So when you had the Joe as a lead, did you go to Dan? Did you say, okay, this is my dream team?
Yeah.
And then you went.
Yeah, that's exactly right.
And then in addition to that, then you got some follow-up on inbound interest.
Yeah, so, it was once we had Joe, it was here are the other top 3 investors that, we would dream to have on board as partners. And once we talked to them, they made a couple introductions, and they made a couple introductions and said, I know someone who'd be interested in this. And it happens organically when there's a little bit of urgency behind it.
And did everybody close at the same time?
Yeah.
So all the checks, same time, all same terms. There wasn't like a roll and close or, yeah. Seems more of that, yeah. All right, so we've got a pretty deep dive on the angel round. And at that point, had you already traction with the platform or?
No, we had a very simple prototype, team of 3, and big dreams. That's it at that stage. Yeah.
How many deals like that are happening in this country? Like when they're still prototypical, would you say? That's pretty awesome.
The funny thing is, though, and you should read this book on storytelling, is angel rounds and seed rounds are really about a story, and they're not about traction. As soon as you have a product in market that has traction, your story is all about how's the product doing and how's your growth rates, all that sort of stuff, which are great if your numbers are great. But sometimes it's easier to sell a dream. And if you have a team that, in our case, we were fortunate we had a track record of an exit, that helped the story. But when you have a big dream and a team that can sell why they're the ones that are going to win, you have a lot.
So what was the key storyline for Wealthsimple?
Huge. I mean, we're super passionate about the mission here. We're trying to transform investing. If you think about the investment management business, it's really broken for many respects. Most people don't have access to advice. If you think about account minimums being $100,000 or $250,000 with both advisors, most people simply can't access advice. Second, the costs in Canada are way too high. We pay 2.5% for mutual funds here. I mean, that's the highest of any country in the world. So it's not hard for people to understand the problem that we're trying to solve. And then once that's clear, it was a question of why are we the ones to solve it. I think that's where the fact that we've been through a really successful experience in the Valley helps right that.
Other questions?
Got a great idea, but I don't really have a lot of industry sort of interested in it yet versus, and I mean, how important is that to investors?
And by industry interest?
Well, if it's finance, I don't have anyone in the financial sector interested in my idea yet, but investors are actually really, really keen on it. Is that really what matters, or is having the financial sector interested in having this solution more important?
I mean, in my sector, the industry is not at all interested in, while we actually view ourselves as an enabler, we'd love to work with the industry and support them for delivering better advice with more transparency and better costs. But, I think a lot of people perceive us as a threat. And, we can debate that. But that part I don't see as
More about the idea that the industry.
Yeah, absolutely.
Any idea why the banks are not involved in this new fund? There's just over the last 3 or 4 months, there's sort of a renaissance of financial tech emphasis, the new Senrep Mars, but like glaring absence of any big banks. What are your comments on that, for the record?
Yeah. I guess the IBC announced that they're going to be part of they're investing in the Mars Center of Innovation or something today. So.
Oh, did they?
Well, at least one bank committed.
Okay.
I'm so uninformed.
Banks are in this interesting spot, especially in Canada, where we really have this market. It's a beautiful market if you're a bank and a telco. There's not really that much competition. You really command the trust and market share of the market here in Canada. And when you think about where they're making their money today, it's off of people 50 plus who make up 80 or 90% of all of their business today and all their profit. In our business, 80% of our clients are under 45. The banks just aren't interested in that today. And they don't know, they've never had a model that's technology enabled that supports a younger demographic of client. So it's just never been a priority. I think, over the next 5 to 10 years, and I actually expect it's going to be much sooner than that, we're going to see a tremendous shift in the banking experience Canadians have, and the experience kind of people in financial services have around the world, because you're going to need to do that to keep up. There's this massive confluence of trends that's going to happen in the next 3 years that's just really remarkable to be doing doing things in financial services. You know, you have an aging baby boomer population that today controls all of the wealth of the world that's going to be transferring it to their kids and grandkids over the next 10 years. You have a millennial generation that's incredibly well educated, that's, you know, over-earning relative to their parents and grandparents, accumulating wealth at a really amazing pace. So if you can find a way to crack a millennial generation, you know, over the next 5 to 10 years, you're going to find yourself in a really, really wonderful position in financial services.
So actually, I have a question.
Go ahead.
Just mentioned, almost all of your customers are young people, right? It's about 25 years old. Why do you think it's only young people are interested in this type of service because of the low fee?
Yeah, so it's not only young people. Our youngest client's 18 and our oldest is 92. So, you know, we really do cover the spectrum, but we certainly skew younger. And I think, as most tech companies do, young people are earlier to adopt, more trusting of technology solutions, have less affinity towards existing banking relationships and that sort of thing.
I think this is a pretty new idea, right, in the financial industry. So how do these customers find your service?
Yeah. So the question is, how are we
Marketing muscle of startup grind.
Yeah, that's going to be the next one, right?
Yeah. We'll go right.
Yeah. Listen, you know, marketing growth is a series of experimentation. We've got 3 channels that work really well for us today. We've got press. We've been really fortunate. We have a wonderful story that the press is really loving to tell, and we're very deliberate about our press strategy. And it's been working really well. 2 is referrals. We incent clients to refer their friends and family. It is by far our biggest channel of new clients and our fastest growing. And that's a really wonderful sign. If your clients are really happy to kind of share this with their friends and family. And 3rd is events. We spend a lot of time on financial literacy. You know, big problem is people don't know. We have this misconception about finance that it's this complex, overwhelming experience that you have to trust the professionals to do it because, you know, it's this really complex thing. And that's just false. So we spend a lot of time investing in helping educate people about the basics of smart finance, the basics of smart investing, to enable them to, you know, have a successful financial future.
If I invest,
No, go ahead.
If I invest in Wealthsimple, who's choosing where my money goes?
Yeah, so every one of our clients gets a dedicated advisor. We call it a wealth concierge. And through a combination of a risk assessment that's trying to identify the type of investor that you are, and a conversation with your wealth concierge, we'll figure out the right portfolio for you. It'll be customized, it'll be used 8 to 10 ETFs, really well diversified, and then we manage it for you. And we rebalance it on a regular basis in an automated way. We optimize it for tax efficiency, and you can check it out whenever you want on mobile apps or kind of on the website.
Is there person conversation? Is that a concierge program, or is there a person?
No, it's a real person. You talk to them by phone, video, chat, text, whatever's easiest for you.
So you hate people that call you a robo-advisor?
We do.
So don't call, nobody call them robo-advisor. Go ahead.
First of all, thanks for sharing so much. It's great to so far. But one of the critical things you said, I think, earlier was thinking when people are getting their first investment, is taking that time, that amount specifically. When the field investment, anybody can go after. How did you narrow your field that you were even targeting yourself to pitch to? I think that's critical for people getting their first one. Do you have 1 million people?
Yeah, I don't know. I think it's a good question. I feel like it was kind of obvious for us. You know, in our case, if you look at kind of the major trends that have happened in financial services over the last 30 years, there are a couple names that pop up as people that were hugely core to those trends. So, you know, the brokerage and discount brokerage market, you know, totally disrupting broker by phone, broker in person. The guy that did that was Doug Stein. You know, he founded E-Trade Canada, really like an icon in the financial services world here. He was one of the first people I talked to. He ultimately didn't invest, but he's a wonderful advisor and, you know, continues to support us till today. You know, Joe, mutual fund industry. He ran one of the first mutual fund companies that had any traction in this country. So there, you know, Sam Safe, who helped, you know, pioneer the ETF industry, and Professor Eric Kersner, who was the head of our investment committee, built the very first ETF in the world back in 1989. So, you know, there were a couple people that just pop up that said, if I could pick, you know, even one of these guys to be partners with, it's a short list. It's a really short list. And I think the message I give there is dream really big. You know, dream really big. There are people that have had tremendous impact in shaping industries and really know, you know, the ins and outs of the workings of their industries, know the entire network of people that you'd ever want to meet in those industries. And there's no reason not to dream big, because they're usually the ones that can see the future and can get excited about new ideas.
Go ahead.
You mentioned that Toronto is a great place for startups to be right now. Being out on the West Coast and now back in Toronto, what would you say is the differentiation or the advantage to be an entrepreneur in Toronto as opposed to the West Coast, and what type of perhaps startup mentality is a better fit for Toronto versus perhaps
It's an interesting question. So the question is, kind of Toronto, Silicon Valley, compare. San Francisco is a very special place. If you're in tech, it's a very, very special place. I think, the big difference is you go to a bar downtown in San Francisco, everybody around you is working in startups or tech. Everybody's talking about the next big thing. They're talking about it. Here you go and you're talking. It's a lot of lawyers, accountants, professional services, which is totally cool, but it's different. And I think if you ever have the chance to go and experience what it's like to be in San Francisco, it's a really amazing thing to do. That said, I came back to Canada because I'm really excited about what's happening in Canadian tech. I think we're at the precipice of just a massive kind of renaissance and opportunity here. And I think now is the best time ever to be a founder or part of a tech company in Canada. There's a ton of angel money for people to get off the ground. There's a community of really smart, talented people that are committed to making this community be successful. And we have now, luckily, with Shopify and Hootsuite and several others, several companies that are just at that edge of creating phenomenal wealth and success for people. That's going to be really important for funding the next generation of startups. This is something that Silicon Valley has benefited from 60 years of just generation after generation of startups funding the next generation. I think we now are going to have that opportunity as some of these companies go public and have really wonderful exits. So.
Would it be fair to say that the San Francisco is saturated compared to Toronto? That's more focused in that way.
Yeah, I mean, it's certainly easier to kind of, I don't know, it's tough. I mean, certainly, there's way more density in San Francisco, and it's easier to stand out here in Toronto. People are seeing less deals. There's fewer companies that are maybe tackling the same problems, so it might be easier to be first mover or first to get leadership in this market. But I think everybody's aspiring to be best in class and to win in their industries, so I think it takes the same grit and the same skills and talent to do that wherever you're building something.
Saturated, no. Competitive, yes. It's competitive in the Valley. And we had Howard Morgan from First Round Capital, who was our second guest for Startup Grind. And we basically said he was, part of the group that he's been doing angel investing in New York for 40 years. He said the exits, it's all about the exits. Like we asked him about government programs, we asked him about angel investor tax credits. It's not all about that. Yeah. It's like when the big exits in New York started to happen, then those investors coming, those people who had a taste and wanted to fund the next generation, that was a TSN turning point. And that was the key to New York overcoming Boston and becoming the second biggest, although Boston has just recovered. But go ahead.
Sorry.
So 2 points. The first one was dreaming big. And when you look at potentially billion-dollar opportunities, and you're looking at a seed round with a story, how do you balance those two? How did you come up with your number? And
The number of 2 million or the valuation?
to raise that first round.
The valuation or the amount to raise?
The amount to raise.
Yeah, I think that's tough. I mean, seed round is really about getting you. I think the only way to think about fundraising is milestones. I mean, I think if you read anything about it, this is really the way people think about it. So you want to raise enough to get you through the next milestone. And so with a seed round, what is that? You might have a team. You may or may not have a product. You want to validate, is this something people want? How long is it going to take you to do that? How much do you want to pay? Excuse me, the small team of people that you need to kind of get you there. I think it's a simple kind of back of the envelope calculation. That said, it's better to be better funded than not funded. So that's why we ended up taking more money than we originally intended to raise. That answer your question?
Kind
of. Okay.
Did you use AngelList or anything like that? No, I think it was all interpersonal introductions. Okay, so let's talk about the Power Corp deal a little bit. When I'm reading it in the paper, it looks like it's kind of a performance deal of some sort, or it's kind of, something just, you didn't get a $30 million check, right? I mean, we're not going out tonight.
We went out, yeah. Yeah.
So maybe just about how that deal came together. Was there an introduction? How long does it take to do a $30 million? I mean, it's a huge sign. I mean, that a corporate venture deal like this in Canada is not since 1989 has there been a corporate venture deal of this magnitude, if ever. I mean, so this is a huge signal that things are turning the corner here. So how did it come? How did it happen?
Yeah, it was a long time in the making. So it took us about 6 months to pull it together. And it happened very organically. So I started meeting with Power, the day we launched, basically, that same week. And it wasn't a, explicit, hey, we'll do our next round of funding, or hey, let's do something together. It was just kind of shoot the shit about the future of the industry and where there are opportunities and what we were working on and seeing and learning.
Did you reach out, or was there an
It
introduction?
was an introduction from one of our investors. And we spent the next 3 months, once a month going for breakfast, just batting around ideas. And eventually the conversation started to evolve into, hey, we're pretty aligned on the way we think about this space and how it's going to evolve. We've got a ton of resources, got a ton of experience and ideas we can bring to the table. You guys have a young, scrappy team that's got great traction in the market. Maybe there's something we could do together. And then it was, let's figure out what that could be. And kind of took a couple months of massaging that into a term sheet and a deal. But all in all, it was about 6 months and a lot of dating.
Right.
Yeah.
When you're actually negotiating that deal, who did you, I think anybody as a CEO of an early stage company would have somebody sitting with you. Did you have a member of your board that was really helping? Was it a law firm that was really closest to it? Like, who was your best advisor as part of it?
There were several, and for different reasons. I mean, one of our partners in the business, Brett Honeycutt, who's a founder of 1,000 Memories and moved up here to build Wealthsimple with me, was hugely important. I think, it's really important to have partners in a startup, and particularly when you go through a really big milestone like this. They have big implications for the company you're building, and you want to make sure that you do them right and are thoughtful about kind of every detail. It's hard to do that alone. So he was for sure, a really, really important part of this. Legal counsel, these things can be very complex, especially when you're dealing with a big financial institution and not a typical venture capital fund that does these sorts of checks all the time. So, getting them structured properly, investing in legal counsel is really important. We work with Osler and Chad Bain, who's just fantastic.
Where's he from?
Chad Bain at Osler.
Osler,
Yeah, he's probably one of the best startup lawyers in the city. And some of our angels, that have done deals. This was my first major negotiation of financing. I was part of selling the company at 1,000 Memories, but I'd never been through this with such a massive institution before that has an entire M&A team. I remember we went and we went in for kind of the big day of negotiations. Right, there'd been a lot of back and forth, and then there was kind of got it stalled a few big points. So we booked a whole day at the lawyer's office. I showed up and I had Chad and another associate from Osler's there, and they had, I think, 5 lawyers from opposing counsel, 2 internal counsel, 3 people from their M&A team, and our partner. And that was the dynamic of that experience. But you depend on kind of the people that are around you that have had the experience, and also on your conviction that what you're building is going to be something big. It is something that, they're obviously at the table with you. So,
did you say yes at the table, or did you say, well, this looks interesting, we'd like to retire and consider it?
Yeah, never say yes at the table. Never say yes at the table.
Okay, who's got some more questions here? Go ahead.
I'm curious about barriers to entry. I imagine now that this deal will attract a lot of attention.
Yeah.
So other companies will be looking
see, well, how hard is that for us to duplicate? So what do you have?
I feel really good about where we are. I mean, there are several other companies trying to do what we do in this space. In fact, we're not the first to launch. Our focus, we love the Ford quote, which is, the competitor to be feared is the one who spends all their time working on making the product better and no time worrying about competition. And that might be like a very naive kind of entrepreneur thing to say, but I really believe that to be true. I think we've built the best experience in the country because we've really focused on delivering what our clients want and not focused on what everybody else is doing. Barriers to entry in this space are very high. If there was a new entrant that wanted to get into this market, it's a heavily regulated environment. Totally new experience for me. I would not encourage any of you to go lightly into a regulated business. It's doable, and often creates barriers to entry, which is a wonderful kind of advantage once you're through it. But if we screw up, I go to jail. It's like a very different sort of kind of downside thing. So you got to be thoughtful about those sorts of things. But that's a wonderful kind of barrier for us. Obviously, now our partner and the funding that we have creates another barrier. But ultimately, I think our biggest asset is our team. The thing I spend the most amount of time and mind share on is how do we recruit and inspire the best possible people in the world to come work for us, and then give them all the power in the world to go build a great company. And I think if we can keep doing that as we scale from what is 12 people today to I think we'll be 30 by the end of the year, if anybody's looking for a great opportunity, we're hiring. I think that's how we're going to win.
Are you finding it a competitive environment? Shopify is soaking up talent like crazy. There's other, are you finding it a competitive environment? And when you say you're hiring, a dozen people, are they all devs?
No. So yes, it's a competitive environment. It's an incredibly competitive environment, but it's always incredibly hard to hire the best talent. This is probably the single hardest thing I've done. Harder than negotiating, a big deal like this, harder than building a product. It's the hardest thing is finding the right people and getting them excited to really commit to what you're building. If you're trying to build a great company, I think that's what it takes. I forget what your other question was.
So is the competitive environment, so you're not hiring all devs or...
Oh, not devs, yes. Yeah. So a lot of devs, we are definitely recruiting to build up our tech team, both on software engineering and design product, but also investment management. So a big part of our model, we give advice, so we're hiring more advisors that can support us as our wealth concierge team, but all sorts of other roles too. Ops is a really important part of our business. We are just, if you are excited about our problem and think you can add value, we'd love to talk with you.
So on that, so what do you look for when you hire people? How do you decide that's the best person?
Very simple. Can they 10x the business?
Actually, I was just wondering, have you ever considered crowdfunding to be crowdfunding right now is
Crowdfunding.
Relatively easier, so whatever.
So did you consider crowdfunding as part of your,
We didn't. We were pretty lucky that things went pretty smoothly for us when we raised. If we hadn't and we were looking for more options, it's possible we would have done that. I think, crowdfunding is increasing in popularity and has helped a whole bunch of different companies, but it's not something I've done. Go ahead.
First off, I like the passion that you have in your story, especially going against a regulated market. The companies in telecom as well and face the same challenges. I guess my question for you is your ideal customer now or your profile, because I've read the couch potato strategy and all that stuff, so people who are not familiar with it, it's just do-it-yourself investment. Are these the type of people you're looking for now? Because these are the same people who don't have access to the investment.
We're looking for a whole set of different people. People that do it themselves currently, but don't really think they're doing a good job because they don't have the interest, the time, or the resources to do it well, and would rather work with a professional at a low cost with a wonderful model to do it for them. We love to work with people that are frustrated with their experience if they're working with a professional today. They think they're paying too much. They're only speaking to their advisor once a year and not really getting the level of support that they think that they should be for what they're paying. We love to work with them. We work with a lot of first-time investors. Young professionals in particular have this really big problem that while they're making great income, they often sit in cash because they're smart enough to know they should be investing, don't want to hire an advisor because they'd rather do it themselves, but don't have the time or interest to actually get started. So we're trying to also compete against people that are just sitting in cash when they really should be doing something more productive.
So if you came here with a question or there's something that you wanted to learn, make sure we're going to have 2 or 3 more questions, so make sure you get it out. So let's broaden the conversation. Thank you, by the way, for being so frank about both of those, the seed stage and that $30 million deal. Great insights, great deep dives. So a little bit about, do you think that there's sort of any implications that we can draw about corporate venture in Canada from this particular deal? Like, what's your feel? I mean, maybe this is contrast to your experience in the Valley and how things have evolved here over the last few years.
Yeah, I think the theme that we did with our seed stage is actually a very similar theme to why we raised from a corporate partner and not a venture partner. It's like opportunity is where people aren't looking today. I don't think anybody's actually out talking with big corporate partners about venture style deals. And I think, there's a tremendous appetite from companies that, having gone through this experience and talking with all the banks in Canada and really understanding kind of their fears and problems, they know the need for technology. They get kind of the role that technology will play in transforming their industries and their business models over the next coming years. And they also understand that they don't have the capabilities internally to do it themselves. So there are these gaps that, there's a conversation that they'd be I think that they'd be willing to have if you have a product or a team that can solve a problem for them. So I think, huge opportunity in corporate venture, and I call it like an untapped opportunity. I don't think many people are pursuing it these days. And I think the same with like the way we did our seed round, like untapped angel opportunity in industry veterans, non-typical tech angels that have done really well, that aren't seeing as much deal flow, get more excited about ideas in their space. So those two things I think are kind of related. It's just
well, that's pretty exciting because that kind of angel investor has not been very active. Like, there's a lot of money in this town, particularly from the financial sector, but it's not really invested in too many technology companies. So perhaps this is it. So let's explore that a little bit about financial tech, the Mars thing. What's your general take on the renaissance of financial tech in Toronto, and in contrast that, did you ever think about moving to New York, for example?
No, New York never crossed my mind, actually. Toronto is awesome for fintech. We have the 3rd largest stock market in the world in this city. We have one of the most developed financial services industries in the world, and all of the banks are based here. Like, Toronto is a city of financial services, like no other city, aside from New York in the world, but probably more concentrated in financial services than New York is. So it's a tremendous, tremendous market to be working in this space. And sadly, if you think about who's doing interesting things in financial services tech here, there aren't that many. I mean, there's some awesome new companies that are just getting started, in lending, in financing, in all sorts of, payments. I'm hoping that there's going to be some more, really interesting things in payments. But, I can probably count on one hand the really cool companies that I know of. But it seems like we're at the, turning point where people are starting to marry, like, how big of an opportunity financial services is in this city, in this country, and really starting to go after it.
For your angel investors, was the value to you for their money or their sort of implied endorsement of Wealthsimple and the connections and introductions?
It's a great question. Yeah, we were very deliberate. We didn't want any dumb money. I hate the term, but dumb money. In our space, trust is so important. Like that, we're really selling trust. Is at the end of the day, that's what we do. And we knew that as a startup, that nobody knew, with some people that like nobody had ever heard of, it'd be really hard to convince people to trust us with their life savings. So it was very deliberate from day one that we need to get some icons behind the industry, from the industry to get behind the company and lend us their credibility. And that was a very deliberate thing that we did. We very heavily relied on kind of the brand names that they brought to bear, and also the networks and connections that they opened to us.
Go ahead.
How do you think power will help you in other markets, other jurisdictions beyond Canada, beyond Canada?
To be honest, right now we're focused on Canada. I think, it's interesting. Financial services is probably the only industry in the world that is just so massive that you can build a really big business in one country. In the Canadian market, we talk about our addressable market. That's not even the total size of the market, just our addressable market is $3.5 trillion in assets. You don't really talk in trillions very often, so it's massive here. But should we get there? I think there are tons of opportunities. They have one of the largest.
Sales, do you think you're going to be able to provide your referrals?
So we haven't discussed any specifics, but certainly I think one of the reasons anybody would want to work with a strategic partner is the opportunity to support their businesses. Both, there's some reciprocation. You can bring some technology that can support their core businesses, and they might be able to bring something to bear that supports you as well. We haven't explored anything specific though.
Tom?
What do you think of Bitcoin, and is it a viable currency?
Yeah, I don't have a fully informed perspective yet on Bitcoin. My current perspective is no, I don't think it's a viable currency today. And this is now on camera, I guess, so maybe I'll be an idiot in a few years. But the thing that I do love...
Why?
So it might be. I think that the challenge with Bitcoin right now is there's no utility. And if they can crack the utility problem, then it could be very much become, what is cash? Cash is nothing. But the government gives it utility. If a marketplace can give Bitcoin utility, then it will become a currency, and that'll be great and interesting, and I'll be totally wrong about what I just said. But that hasn't happened, and I'm not sure how long it's going to take to happen. Right. The thing that's amazing about Bitcoin is blockchain technology. I don't think people really understand what happens when you make a transaction online today with a credit card or a debit card or a e-transfer or any of that crap. It is a mess. There's a debit on one side, a credit on one side, a reconciliation that happens. Half the time it's wrong. All of the paperwork and mess that happens behind the scenes goes away with blockchain. I mean, it's incredible, right? It's like cash. You can lose cash and it's gone. If I give you cash, the transaction's done. There's no more to it. So this idea of frictionless payments becomes possible. I'm really excited about frictionless payments. This is one of the biggest problems in our experience today at Wealthsimple is when people transfer accounts to us, it can take up to 40 days. Legally, a bank can hold money, not transfer your account for 40 days after you request them to do it, which is insane. It's your money. You should be able to move it wherever you want. It should be frictionless. It should be fast. It should be free. So I'm really excited about kind of frictionless currency and the ability to move money around quickly, cheaply, and all that sort of stuff.
It's a good question.
I'm just wondering, entertaining other corporations as you deal with power corporations, just take your call power. Were there other players you were entertaining along the way?
Yes. Yeah. I mean, I don't think you get into bed with anybody in this material of a way unless you're sure that they're the right partner. So we talked to a whole bunch of different players. We talked to VCs. We talked to other financial institutions kind of as we were building the business. But it was very, very clear from early days that kind of Power shared our vision for this space and would be the best partner for us.
Were you approached by domestic VCs?
We were. Unfortunately, we were lucky that we kind of knew the size of a round we were looking to raise. There are very few VCs in this country that can support that. So there were a couple of conversations, but there's not that many people to talk to.
Okay. Wow. We've had a lot of VCs sit in the chair, but we need to have more founders sit in the chair. And this was a great time to have you here when everything's fresh. And so thank you so much for agreeing to do this. And thank you for being so open and sharing some great experience with us.
Well, I hope it was interesting and useful. Thanks for having me. It was fun.